In terms of returns, let's start there. A lot of people are like, you've written you target 20. Is it guaranteed? Do you guarantee 20%? So maybe let's begin there because we need to bust that myth. Yes. Because do we guarantee 20%?
We definitely do not guarantee 20% because if we could guarantee 20%, I believe the flood will be more. That is one. Two, majority of people will just liquidate their fixed assets and bring here for a guaranteed 20%. That's what would happen unless we are in a very high inflationary period whereby rates are at, let's say, 30% like we had, I think, some years, like 12 years, 13 years ago. So we do not guarantee the return. However, this is our targeted return. So we are working day and night to try and reach that. If we get above that, like last year, we'll be very happy. If we get maybe approaching, it's still okay, depending on the prevailing market conditions. As you have seen right now, we saw interest rates really drop. They started dropping from around October last year. And you can look at maybe the central bank website or even the newspapers, where treasury bonds have come down to levels from 16 to around 10 for the 1-year T-bills. And the others, the 91-day T-bill, which is 3-month T-bill, going down to levels of 8%. So the environment keeps on changing. So as much as we are targeting, we are trying to work with the various, the environment as it is, both local and global. Thank you.
We've received a lot of questions about the different things that are going on in the world. The trade tariffs, the macroeconomic challenges that are going on in the Middle East and with Ukraine and Russia, and just the changes economically around the globe. And we will do a separate video to address that, because even as we talk about target returns, the question people have had is, with everything going on, how is that affecting your performance? We'll look at that as a separate video. But for now, let's go into our returns and how did we do. So Q1, our absolute return for the quarter, for the 3 months, was 4.66%. And that return, when you annualize it, works out to about 18.64%. So let me just stay there for a moment, and I want Ian to come in and sort of just break down, when you say absolute return, what does that mean versus annualized return?